Is this still a case for arbitrage funds? And this is a question by Amar.
Yeah, I will actually explain you what arbitrage fund is. Arbitrage fund was almost like a liquid fund in terms of return expectation, because they invest in equity, and these funds buy shares and sell an equity derivative at a future date, and whenever there is a difference in the price, a future is and that normally translates into that is without assuming the risk of the equity market. You are realizing the gains, pocketing the gains between the mispricing of the two securities at any given point, and those are never big, hugely mispriced. That translates into a return, like it becomes the nature of these returns is like that of liquid fund. But because of this tax situation, that it is derived from equity and equity derivatives, it is treated as an equity investment. And earlier equity was completely tax free, so it made sense. If you realize 7% from arbitrage fund as compared to 7% from a liquid fund, 7% return from arbitrage fund after a year was completely tax free. 7% return from liquid fund was fully taxable, and it will be indexed and taxed at a lower rate only if you hold it for 3 years, which is normally not the case. Normally you invest in these funds as a short-term parking avenue. Even the dividend from arbitrage fund used to be tax-free, because equity dividends are tax-free. No longer, it will be subject to 10% dividend distribution tax. So in that sense, they are no longer attractive, because they were not hugely rewarding. It was a tax arbitrage, and it was giving. So the case for arbitrage fund as a safe, low yielding and efficient tax way, concessionally taxed, that is gone.